Moving on to net asset value or NAV. NAV is simply the market price per unit of a mutual fund scheme. We have covered the NAV calculation in detail in our Amphi video on NAV. You may refer that video for further understanding. Now, since the NAV is the market price per unit, therefore, the investors will get their units on purchase and proceeds on redemption on the basis of NAV. So, let's say your investor invests rupees 10,000 in a mutual fund scheme. The NAV of the scheme is rupees 50. So on the basis of this NAV, the investor will get 200 units of this mutual fund scheme. Some key points about NAV that you must take note of are, firstly, the NAV for scheme keeps fluctuating and hence it is updated on a daily basis on various websites such as Amphi's website, the mutual fund's website, NJ's website, etc. The NAV of a scheme fluctuates because of changes in the value of securities or assets held in the portfolio, or because of any interest or dividend income received, or because of any capital gain or valuation gain. And lastly, the NAV fluctuates because of the expenses of the scheme. The second important point about NAV that you must note is the growth option of a scheme will have a higher NAV than the dividend payout option. This happens because in the dividend payout option, the profits of the scheme are passed on to the investors periodically in the form of dividends, while in the growth option, the profits of the scheme are retained in the scheme and are allowed to grow further, which reflects in the difference between the two NAVs. These are the NAVs of Reliance Growth Fund as on 26 December 2017. As we can see, there is a huge gap between the NAVs of the dividend option and the growth option. This is because since 2000, this scheme has been giving out dividends to the unit holders in the dividend option, while in the growth option, these profits remained invested in the scheme and the scheme benefited from the power of compounding. Next, and a very important aspect about NAV is the cutoff time. Cutoff time plays a very important role in determining the NAV that the investor will get. Since at NJ, all transactions are done online, so if an investor applies before 2 p.m. in case of an equity scheme, he will get the same day's closing NAV. Similarly, in case of a liquid scheme, if the investor applies before 2 p.m., then he will get previous day's closing NAV. Further, it is important to note that in case of an equity scheme, if the transaction amount is above rupees 2 lakh, then the NAV is based on fund realization and not just submitting the application. At NJ, we register a bank mandate. So if the bank mandate for an investor is registered for rupees 25 lakhs, then no check will be required from him for a transaction of up to rupees 25 lakhs. So if this investor applies for a transaction of less than rupees 25 lakhs, let's say rupees 8 lakhs, before 2 p.m., let's say at 1:30 p.m., then his application will be processed immediately and he will get same day's NAV. However, if the same investor does not have a bank mandate registered, then he will have to pay this rupees 8 lakhs by check and he will get the NAV of the day when his check gets cleared. This is the BSE purchase transaction cutoff time table. You can use this for your reference in determining the cutoff time applicable for any transaction. And that was all about NAV. Thank you.